Bitcoin has seen a steep short-term correction resulting in a move to 65,200. Will the buyers step back in and push the price action back over the range high, or is Bitcoin going to drop even lower? In today's video, this is what we're answering and so much more. Let's jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at the recent short-term correction for Bitcoin, resulting in a move down to 65,000. We're going to be discussing whether or not this move has high time frame implications, the recent bounce pushing Bitcoin back above the daily highs, and of course, our projections moving forward. Is Bitcoin still bullish? Are we still going higher? And how low can Bitcoin go if we are to see a continuation down? Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in VIP. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to all of our group chats, our general chat, our trading chart and education chat, our daily video help, news, and trade setup chat. Check that out, guys. Join nearly 700 members by clicking the pinned comment, clicking my name, or these links for more information. And let's go ahead and jump on in. So as we can see, over the past 24 hours, Bitcoin saw a little bit of a flash correction. In fact, we lost that critical level of support that we discussed in our prior video at 66,645. And we said if we were to drop below that region, there's a pretty good chance we see a correction that could take us as low as 64,000. This correction did not take us to 60,000. In fact, we saw the correction down to around $65,228. And since then, we have seen the price action bounce quite strongly. Although this was a steep correction, the closing price at the moment on the daily was pretty decent. The reason why it was decent was because we were able to sustain above this prior daily high, actually flipping this level into now an area of support and creating a new higher low with that structure we have been developing over the past 2 or 3 months. We'll come back and discuss it in a second. So although the last 24 hours of price action was quite brutal, we saw a big flush toward the downside. The closing price on the daily was okay. Of course, we are underneath the macro downtrend, which is not amazing, but we are still sitting above these prior highs, indicating that we do not have confirmation of continuations lower as of yet, but we do have now a strong validation of what will need to occur for that continuation to happen, and even now a possible reversal point. We'll come back to all of this in just a moment. So overall, pretty brutal 24 hours, but we were able to clamber back up, creating a new support and a new higher low in the process. Moving over to the DXY, this is where it gets a little bit furry. We can see over here, the DXY was able to break above that horizontal resistance. This is not a good thing. As we said already, generally when the DXY is moving upwards, we do generally see risk assets move downwards. There's a higher time frame inverse correlation. Now this correlation doesn't span the shorter time frame, sometimes it does, but the correlation gets greater around 70% the higher the time frame we move to. So we can say generally when the DXY moves up, we generally see risk assets move down. And we do expect the DXY now to continue a little bit higher, that it has broken through this horizontal resistance. So we are expecting DXY to move upwards to this resistance, this downtrend, provided this level of support now holds. If we drop back below here, we will then be expecting a correction down to 100. This correction will be bullish for Bitcoin. This move here puts Bitcoin in a bit of a tricky position, which could facilitate more downward price action. Looking very close to the DXY over the next coming weeks. The S&P 500 saw a little bit of a pullback this week. Again, A bit of a bearish divergence in a bit, should I say, a bearish engulfing candle currently printing. Again, we do have 1 day and 22 hours remaining until confirmation. Of course, if we were to close this daily candle underneath the opening price of our prior green candle, that could indicate a possible top for the S&P 500 on the short term, which could develop into a correction, especially when contextualizing what the DXY is doing over here. So we are paying very close attention to the next 2 days, particularly for the DXY and the S&P 500. Again, if we are able to close above that low, we could see that price action spin back around and head up to 6,000. So the overall vibe you should be getting, and what I'm trying to really express, is that the market on a higher time frame is good. We're still building a strong trend, the trend that we have been developing since the bottom at 49,000, which is again these lows, these higher lows developing higher lows, and of course these higher highs developing. However, what we are seeing is a little bit of exhaustion here at the range high post deviation from the range, and we are now seeing the dollar start to increase in value. This is again setting up for a potential correction for the market if it does continue to develop. Not yet, but it is something we have to be aware of. So before we get into the crux of the analysis, go ahead and sign up to BitGet, BitUnix, or BingX. You'll get a lifetime trading fee discount of 15% off all your trading fees by using the links down below. You'll help support me making these videos, and of course you'll support yourself in your trading career. It has saved me well over $100,000, potentially even this year alone from trading fees. It saves me a hell of a lot, and it can save you a lot too. Again, that 15% can build up to 45% based on your trading volume. So take advantage, sign up, replay your ad, and we'll jump back in. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back into it. We are starting on the daily, the weekly high time frame, and then jump down to the short time frame to discuss exactly what is happening. So as we said already, there are two distinctive patterns playing out here, and two phases of which we have seen the price action move within over the past 8 months. This, of course, is our macro descending trend line of our macro channel. We've got phase number 1 over here, spanning to the bottom at August 24th, and phase number 2. Phase number 1 was our bearish phase. Phase number 2 is our bullish phase. The difference between the two is the way of which the price action is moving. In the first phase, we saw again lower highs printing, and of course lower lows printing. This of course was a bearish continuation. We had then seen a significant shift from the retest at 49,000, where since then we have been seeing higher lows develop on the price action, printing yet again another higher low, as well as higher highs, breaking these prior levels of resistance as we go. This is indicative of a uptrend. In fact, it is indicative of a strong uptrend, as the price action is not only creating these new higher lows as the price action corrects, indicating there is buying pressure, but it is breaking these prior levels of resistance as it is doing so. And as we know, the trend is your friend until it ends, so we should expect the trend to continue until the validations of the trend cracking are present. And for us to say that the trend, should I say, is actually breaking, we are watching metrics of strength such as momentum. Moving to the daily chart over here, we can see on the RSI, we have got a very clear uptrend on the RSI. This uptrend spans the distance from our 49K lows into our prior lows, and again marks every single one of these higher lows, that we have been creating. So while the price action has been moving upwards in this aggressive continuing uptrend, we have also been seeing momentum move upwards, and therefore this momentum here is a representation of the strength of the trend. So if we see the momentum flip negative, it is wise to assume that the developing strength of the trend has of course been lost, which increases the probability for a shift or a change in character of the price structure, which could result in a continuation or, at worst, a breakdown of these prior higher low points. Again, what would we need to see for that to occur? We would need to see the RSI break this uptrend. If the RSI were to break below this uptrend, that in our eyes would be an indication that this pattern that we have been developing, this pattern of developing strength, has been lost and the sellers are back in control of the price action. Again, it is slightly lagging as it is on a higher time frame, but it is going to be expanding again, but it is again a leading indicator when it is broken, but it is lagging moving into that breaking price. So a point of which it breaks, it is leading for the future, but until it breaks, it is lagging on the direction of the short-term trend, which is totally fine, as we need to trust that the uptrend will be an uptrend until it is broken. So those are the points we are watching. Until that occurs, Bitcoin is still bullish until the RSI breaks this low and the price action sweeps below our prior lower high, which is right over here. The trend is still in favor of a continuation upwards. Now, that does not mean we immediately see a continuation upwards. We'll discuss it in a second, but the macro trajectory of the price action is still bullish. So, unfortunately, we saw deviation from the range high. What an absolute letdown. 8 months of consolidation, a breakout only to see deviation. It is an absolute letdown. But again, this is very insignificant in the grand scheme of things when we look at the higher time frame charts, such as our weekly charts over here. We can see until the invalidations are met, Bitcoin is still bullish. Looking at prior macro uptrends, even going back to our 2017 cycle, upon the breakdown of the Ichimoku cloud upper band and Gaussian channel upper band, that is when the bear market officially started. That is when the macro downtrend officially started. Upon the breakdown of the Gaussian channel upper band and Ichimoku cloud upper cloud leading span A, that is when the macro downtrend started. We have not yet seen that. We are still above the Ichimoku cloud leading span A and Gaussian channel upper band, and therefore we are still in a macro uptrend, and only a breakdown of these levels would be suggestive of a potential macro downtrend starting. And guess where these levels line up with? Let's go ahead and zoom in. The leading span A lines up with the price point of 59,700. The Gaussian channel upper band, by the time the price action reaches it, will be around 59,700. Looking at the price action, where is 59,700? 59,700 is actually underneath the prior lower high, or should I say higher low. It is sitting under. So that comes back to a point we made before. For us to see a macro trend shift, we would need to see the price action drop below that point to indicate that the trend which we have been developing along with the positive momentum flips bearish and the price action is going lower. Until that happens, the expectation is that we eventually continue higher. I am bullish on Bitcoin provided 59,000 is able to hold. So when we zoom out and take the context of the higher time frame, it doesn't seem as dire as the short-term charts. Now, as we've said just at the start, just because Bitcoin is high time frame bullish, it doesn't mean we can't see short-term corrections. Let's talk about these short-term corrections. This is the short-term chart for Bitcoin. We have seen, of course, a pretty hefty breakdown for Bitcoin, pushing down into that $65,000 region. Again, we saw that upon the loss of our horizontal support at 66.4. We're keeping this chart very simple just to go ahead and lay everything out for you. There are two levels we are really paying attention to. Number one is going to be 68.2. This is going to be the region up around this area over here. This is going to be a critical resistance. And of course, the prior level of support that we just broke down from at 66.64, the area of which we are basically retesting as we speak. If we are able to break over 68.2, it is highly likely Bitcoin is going to continue aggressively higher. There are about $1.2 billion in short liquidations occurring at the point of which Bitcoin breaks over this region, which is absolutely massive. So if we're able to break 68.2, which we look at the daily chart over here, 68.2 would be back above the range high. It is highly likely we are going to see that continuation aggressively higher. If we take a look at our current short-term resistance, we can see we do have a pretty significant hill over here on the VRP that that we do need to break above, it is very, very, very likely this region between 66.4, where we are retesting, on 68.2, takes quite a fair bit of time for us to break through, even if we continue upwards. So I do not expect significant volatility between these two price points. The volatility will occur outside of these areas. So anything underneath 66.4, we are going to see volatility. Anything above 68.2, we are going to see volatility. But the price points between those regions, we are expecting consolidation and maybe even a chop range to develop. Moving back to the short-term correction, if we do see a loss of this region again at 66.4, it is highly probable we could see a steeper correction to take Bitcoin all the way back to 64,000 as a low point. This is again the lowest we could potentially see Bitcoin go upon the breakdown of this area of support. Again, for that to occur, Bitcoin is going to need to lose this prior high on the daily chart. If we look at prior instances, such as the prior breakout of the even prior high, which we'll go ahead and draw in over here, what did we see, guys? We saw again a daily candle break below, and we saw a steep correction to retest that critical area of support before the rally upwards. In this instance, that is going to be sitting right over here at 64,000. So again, a breakdown on the daily could result in that continuation back over here, establishing a new higher low and then continuing higher. So I'm definitely paying very close attention to the daily close on this prior high point. But overall, the price action has bounced well. We've established a new area of support. We are entering this region over here where volatility is likely to reduce, and we are going to see a new trend develop. And overall, it is not a place we are going to be aping into positions. It is patiently waiting. This whole month has really been a game of patience. We saw the break upwards. We have deviated back below. We are still holding the uptrend. It has been a month of consolidation. It has been a month of expansion, and it has seen a month of deviation, all in the last 24 days. An absolutely crazy month. Actually, probably, I would say one of the craziest months of the year so far, considering that we've seen that break upwards only to move into deviation after a very, very slow start to October. But it is what it is, guys. Thank you for tuning in. I hope you all have an amazing rest of your day, and we'll catch you in tomorrow's video to discuss the recent developments. We'll see you then.